Okay. Well, hi, everyone. Thank you for coming to the panel. I wanted to thank especially SpainCap and Day One for sponsoring this event. And we're going to talk about, what's going to happen what's happening in this new cycle. So maybe I can get the panelists to come to the stage, Rai, Ana, and Alvaro. Okay. All right, well, thanks, everyone. The theme of the panel is how to manage in a new cycle market. So we've all been hearing a lot in this last few months about, what's changing, high inflation, expectations of, a new cycle, how it's impacting startups, businesses, funding rounds. So it's a lot of uncertainty, definitely. So we're going to touch a little bit on this topic this morning. I'm going to start by letting the three panelists introduce themselves. So, Rai, why don't we start with you?
Thank you, Sonia. I'm the co-founder CEO of Ritmo. We are B2B payment financing solution for e-commerce companies here in Europe and Latin America.
So, thanks, Sonia. My name is Ana Villanueva. I'm one of the co-founders of Tico. We're a prop tech company that allows homeowners to sell their house in just a few days in a very hassle-free process. And we do this by, first of all, buying the asset and then digitizing the end-to-end process to make it scalable and guarantee a good user experience.
Excellent.
All right, so first, thanks us for inviting us here. Flattered to be with such an impressive panel. I'm Alvaro. I'm one of the co-founders, one of the three of TaxDown. It's a platform where we try to solve taxes for people. Basically, we want to give technology to empower people to manage their taxes on an active way. I internally manage all what is related to product and business strategy.
Great. So we're going to start with you, Rai. So Ritmo provides revenue-based financing to businesses that sell online. How do you think this new cycle is going to impact their ability to finance their businesses? Do you think Ritmo is going to be more relevant for them? Are you seeing any changes, if any? Can you tell us a bit more?
Yeah, we definitely see a lot of changes in the market. We have a lot of data from thousands of e-commerce companies where we specialize ourselves. And the changes, none of these e-commerce are performing since like the data they have from the pandemic. So they're coming back to the 2019 numbers, essentially. And the problem is no more a growth, it's more a cash flow and survival problem. Ourselves, we are not focusing on direct-to-consumer brands. The method of alternative finance that we use is applied to working capital. And the problem we solve in the market is the cash flow problem. It's not the growth problem. So we see ourselves becoming much more relevant because of two reasons mainly. The one that is very aware of everybody here in the audience, and this is basically the inflation rate and the supply chain crisis in China and overseas, that it has increased the freight and forwarding cost for 10x and increased everything on the shipping and the product, and it's becoming a lot more expensive for e-commerce companies. Our clients, oftenly, they don't have a ratio of debt that is more than 2% and 5%, so they are not a heavy debt company, asset-light companies. And most of these companies, they were not having the right proposal for them. So what we did in the last 4 months is adapt our proposal to what they want, which is basically extending the payment terms with the suppliers, giving more firepower to optimize the working capital cycle, and align the payments with the financing. And for us, it's been a very, very intense 4 months and a half. We were lucky that we started to execute this 6 months ago, because instead of servicing the startups ourselves, we were looking for servicing SMBs. And SMBs' problem is not growth, because they don't expect to grow like double-digit month by month. They can grow 5%, 6, 10 growth. They are cash flow driven positive companies. The problem solving is different, so you need to adjust your product offering. So I think one of the things for us it was very important is listen to the market carefully more than ever, adapt your solution as fast as you can, and for our case, where banks are actually giving less credit and suppliers, our mission here at Ritmo is connect the merchants with the suppliers. The suppliers are giving most often credit to their clients, and that credit is freezing right now. Banks are giving not credit as well to this specific. So for us, it's a very specific, great moment where we can jump there with cautious, because it's a tough moment to lend money, and also by identifying how is the best way you can serve those clients. Is that only giving capital, or is just helping them to manage the cash flow? Because if you give only capital to the business and you don't teach them how to manage the cash flow, they can spend the capital. And if you give a lot of capital and you give a loan, instead of giving optionality of creating a capital efficiency infrastructure, then the capital, they need to give the money back to the client. So for ourselves, it has been a journey. We adapt ourselves to be a capital efficiency company. Even though we are a balance sheet company, we are a capital efficient company because of our product offering, our infrastructure of that, but also our clients, we are encouraging through our product offering to be a capital efficient company. So adapt yourself to the market. For us, it has been more relevant than ever because suppliers and merchants still, e-commerce companies and the e-commerce sector itself is not growing as it was growing the last 2 years, but it has very strong fundamentals. And for example, in Mexico, it's growing 20% this quarter, so different regions, they have different...
Definitely, you're a great solution to this problem. Anna, what about real estate? We have, in our funds, we're also exposed to real estate companies. What's your view with this new cycle? Are you seeing any impact, less transactions being done? A transaction will always be done, but at a different price? What's
Sure.
your take?
So this is interesting because most people, think about the correlation between the real estate and this overall economic cycle. And despite, I think we have a very young audience, but at least we have lived through one crisis, 2008. Probably we can consider mini crisis for the pandemic. But every time we think about these periods of time, they are long periods of time. So our particular business, Tico, we actually buy houses, but we hold them for a very short period of time. On average, it takes around 90 days, from the moment that we buy to the moment that we sell, and half of that is for the new buyer to actually get the mortgage, so they have already advanced us some of the prepayment. So we're really not that exposed. What we are seeing, if we look at historical data, on a quarterly basis, these 90 days, the price changes are at most 1-2%. There are only 3 moments in time in which this was more than 4%. One of these moments was June of 2020, and then it recovered just the next quarter. So, as I said, if you look at long terms, there can be a significant exposure and impact, but in the case of Tico, we are really very limited exposed. So really, we are not being significantly affected. On the contrary, in these 5 months, we already did the business of last year. So
Congratulations.
Thank you. So we are seeing, growing demand. In the end, we are also focusing on very liquid markets, on the houses that everyone wants, right? The ones that are more standard, and really we're seeing a growing demand. So of course there's some impact. So people that they buy now, the mortgage is more expensive than if they bought 6 months ago. Also the construction material, as you were saying, have increased, but these are not significant impacts in our business. As I said, on the contrary, we're seeing growing and growing demand. In the end, people need to buy and sell houses, regardless of the cycle.
Great. Alvaro, now to you. You focus on helping consumers with their tax returns, and it's very cyclical. We've all seen your ads on TV. Do you think this new cycle or this new economic time that we're seeing, do you think it's going to have a positive impact on your business because people will look at efficient solutions online to do the tax returns? Are you seeing anything?
I always see opportunities. No? So yes, of course, something is happening. That's obvious. No? So the market is moving. For our businesses, as you mentioned, we are super seasonal, and that allows us to have some skills that are really relevant for moments like this. No, we adapt to business dynamics really quickly. We were able to hire a lot of people and grow the team by 2 or by 3 for 3 months, no, and go back. That I think is something that is difficult to learn. So we're well positioned in that sense, and taxes is counter-cyclical. It's a business that
You always need to pay taxes.
exactly, no, even and not even if you are in a bad situation, you probably have unemployment, or maybe you will have people that is selling their crypto to make some gains, no, and live out of it. So all of that type of transactions are things that are good for our business somehow. No? And also in terms of the company or the startup ecosystem, I do think that hiring is also an opportunity. Like there's tons of people that are being laid off from big tech companies. So for us, it's a good moment to fish some talent. And I understand that even if debt is going to be complicated, like healthy, good companies, they're always going to finance their growth with debt. It's something that we have learned in the past 30 years, so that's not going to change. So I think that something is happening, but it will affect the less competitive companies. No? The good ones will always have debt, funds behind, etc.
No, that's great. Right, you finance yourself with equity, but most of the financing is leveraged, so you have the debt facility. Are you seeing more restrictions on the debt access for a company like Ritmo? Anything that you think has changed now with the new market?
Yeah, we were very fortunate because we raised it and closed it 2 months ago. And so
Yes.
for us, it was we are in a very good shape on that perspective. And yeah, definitely there's a lot of changes, more strict covenants. People are getting less risk averse. The environment is not looking good. I don't have a crystal ball to say what is going to happen. I just look about my business. I'm the bottom line, looking about all the data. But debt is going to be also an alternative all the time. If in my sector, where it's 2.5% of ratio of debt compared to SMBs, which is 20-25, I mean, there's a lot of room from this. And because of the structure of online sellers or e-commerce companies, SMB e-commerce companies, where they don't have assets, they're asset-like companies, most of the expenses of the investment, they go off to suppliers, and for those kind of companies, smart lending is always gonna be relevant. And in terms of raising debt, if I can make my suggestion, there is, I think it's gonna be tough for the next 6 months, but then it's gonna be open a huge cycle where there's other projects that provide debt finance to startups. To be relevant here, and these players they provide alternative ways of revenue base or of others for startups. They can help some startups to extend the runway. So I see that the environment is becoming a lot more complex for raising. In our case, essentially, we were very fortunate that we raised before, and we don't change the covenants, and we have a very solid underwriting. The thing that we move into payments and financing and execute the payments and generate revenue from different sources at the same time and relate the financing and the payment, make our financing a better product and the payment a better product itself. So it's a kind of synergistic approach. And in terms of how do we see the environment for debt, I think there's going to be an opportunity maybe in 6, 9, 12 months because there's plenty of debt and liquidity in the market. But will be a lot more restrict, and the covenants will be a lot more strict because we're getting into a down cycle that we don't know how it's going to happen, and if it's going to take 12 months or 2 years or 4 years. That's my view.
Hopefully not 4 years.
Yeah.
Anna, what about you? In terms of real estate, do you feel you need to innovate on your product to make it more attractive in this given economic context? How do you see Tico differentiating its value proposition with the consumer?
Yes, as I said before, we haven't changed much our way of working. Obviously, we are considering fundraising will take longer, and you need to be a little bit more conservative in terms of cash that you keep, etc. But as I said, people continue buying and selling. I think what it has changed, as Rai was saying, is growth is not only enough now. You need to have solid financials, and I think we're in a good position there. We have good unit economics, already EBITDA positive. So we want the fundraising in order to grow, but we are not very concerned if it takes longer than what expected, right? So as I said, we haven't changed much in terms of the consumer. We are a little bit more conservative in terms of how long it will take. But I also see this as an opportunity. So there will be consolidation, and we are already seeing this. So for companies that either don't have the cash or are not EBITDA positive, this will be really.
Are you looking at M&A opportunities right now, maybe, or?
I think we're always looking, but it is not a priority for us right now. Yeah, I do believe companies with solid financials, obviously, in addition to cash, will be stronger out of this crisis. And in particular, in real estate, I'm also very optimistic, not only considering the European landscape, but also Spain in particular. Because this is another counterintuitive thing that people think just because Spain doesn't have one of the largest population, it's not as relevant for some industries, but we are the number 2, Iberia, Spain and Portugal is the number 2 country in Europe in terms of volume, right? So I think whoever makes it well in Spain will have higher chances not only of becoming a European champion, but also a global champion. So tough times and we need to be cautious, but I am optimistic.
Great. What about you, Alvaro? Are you seeing, what trends do you think will change, if any, in consumers adopting fintech products and going more online? Do you see anything that will impact the way that you need to market your product, that you need to adapt?
Totally. So more than ever, they will be looking for products that will make them save money, no? And ours is one of them. And I think it will have an opportunity during the next years, no? So people will be looking at really getting out of their taxes what they really owe. So for us, it's something that is changing. And in terms of technology and how I see that change in fintech, or the adoption or penetration, I do see that money is flowing freely now to countries or to even continents at a much higher pace than before. No? It's true that now it's slowing down, but last year was record for LATAM, no? For example. Mm-hmm. So all that money is going to be productive at some point, and is going to return value to the continent, to the countries. And on my experience, what I have seen is that that this type of countries that are maybe not as much penetrated as Europe, for example, they used to skip some steps on that adoption, no? Maybe we will not do 4G and go directly to 5G, so that thing is happening. So yeah. I don't see an effect that is not accelerating the adoption of fintech products that makes your life better, save money, higher productivity, so it's going up for sure.
Great. Maybe one other question for the three of you. I'll change the order. So, what are your investors telling you? What are they advising you to? I mean, I want to hear it from you. And are you worried about funding? Getting to your funding round next. What metrics? Is it going to be more strict? What tips are they giving you? Since everyone is tweeting about things that founders need to do. Anna, do you want to start?
Yes, so I don't want to be repetitive, but we are relatively safe. I mean, we have peace of mind in the sense that we have a sustainable business model, right? So the fundraising is not to survive, it's to grow, right? But I don't think there is a consistent, even amongst own investors, a consistent opinion. So, I think everyone has read the Y Combinator letter, like if you are super dramatic, right? If you're considering fundraising in the next 6 months, don't. So I don't think there is a black or white. I think you need to be aware that it's going to take longer on average, and the valuations are going to be lower. So if you are super valuation driven, I think it's wise to wait. In our case, we really have a vision, a global ambition, and valuation, of course, we care if there are investors in the room, but it's not the number one priority. So for us, it hasn't, as I said, it hasn't changed the plans, but we in our predictions, in our estimations, we know, it can take longer and at a lower valuations. But we are
You're in good
growing,
shape.
investing in
Tico's in good
technology.
shape. Everyone. What about you, Alvaro? Are you?
We are fundraising, so different stage, I think, maybe. But we feel confident that it's going to happen. No? As I mentioned, healthy companies will always find depth for growth. And I do think that tax-down is an opportunity to change things around the world. We have changed it in Spain. We're changing it right now in Mexico. And numbers are looking good. No? We're learning a lot about some things that we didn't expect at the beginning and that changed the business model completely, no? On how we approach people and how we get that holistic approach or solution to the consumer. So well, I do think that everyone will need to be more efficient. But something that gives Spain to Spanish companies is that, or Spanish startups, is that we learn to be efficient really early on. No? Since we are not that near the capital markets, we have to compete in that sense with other well-funded players, and in that sense, I think we're better prepared to tackle this market. No, less crazy valuations in Spain than in other countries or whatever. No, so.
Great. What about you, Rai?
Yeah.
Any tips? Fire some people.
We're all
get
all
the cash.
optimistic. That's not that common, eh?
Come on.
I think it's much more hard right now to fundraise. As Alvaro, I'm actively fundraising right now. I think it's all about getting good fundamentals and getting great teams behind great visions and great spaces to execute and distribute. And these teams and these businesses always get the money. And in our case, we are a 15-month company, a very young company. Ourselves, we have raised a substantial amount of capital and debt. As we have been saying in the panel, there's not all about valuation. If you are crazy about valuation, we ourselves, we're very committed on building a very strong business in Ritmo. And I think in our space, we are getting into a very, very opportunistic space, which is payments ourselves, and that has allowed us to unlock some investors' pocket money that they are looking for more long-term investments. It's tough. You need to have more fundamentals. You need to have a lot of good economics, more than ever. You need to be less focused on your valuation and more focused on who is you bringing into the table. And I think it's much more harder, but by the other side of the table, you see the right investors when they're investing in the down cycle, and they support businesses that they're going into after this. As we have operations in different regions, and some regions that we're not affected, as in Latin America, we have interest from different players, and in our view, is about making them more compelling. It takes more time. The valuation is not the main thing. Focus on your fundamentals and preserve cash. And it's tough. And in our case, when we were 9 months, 10 months, we received a lot of pre-empty offers for a valuation that is higher than what we expected today, and we have 5 times or 6 times bigger business in terms of monthly recurring revenue today. So it's all about expectation and getting the right. If I go to take the money and that percentage, I need to support a valuation that to be honest, it was crazy. And that's the reality. And so things are getting into fundamentals. I believe VC money is floating, and I think it's going to be hard the next 3 months for some people, yeah. But then I didn't stop to see funds raising more funds. And then eventually, at the right valuation with the right teams, there's always going to be investors looking for this kind of things. That's my view at risk.
Yeah, I think the money is there. It's a matter of them being more cautious in the investments, right? But I don't know. Maybe you can tell us your view of that.
I appreciate the honesty. I've never heard a founder said that that their valuation was crazy, but no, it's great. No, I'm really happy that.
Careful, right? Careful.
No. I'm just kidding. But no, but it is true. I mean, sometimes you're very happy because you got 100 times, ARR.
It's not going to happen.
It's very. I mean, you can call it crazy, you can call it overvalued, you can call it whatever you want, but it's clearly, if you try to explain that to somebody, it's going to be very hard to justify. So I think the market is definitely putting things more into perspective. I wanted to ask you one last thing, I think, question. What would you expect now from your current investors? I mean, you're not a portfolio company of Kibo, but I'm interested in finding out what would you want investors to help you now? Obviously, fundraising, but the ones that are in your cap table, what advice, I don't know, what would be useful for you? And this was not prepared, so.
I don't know. I'm reading a lot now about the scaling, so that will be probably one of the things that would put more on the table right now for us. Know how to hire better teams, how to organize, how to improve growth and growth rate. So I think those are the main things that I will ask an investor now.
I think fundraising is here, and then the rest are peanuts compared to fundraising. I think what we expect is, in a certain moment, if there is a need, that they're there, in terms of making follow-ups, etc. Rai mentioned something before that I think it's key for many companies, and maybe they haven't invested that much time into it, which is cash flow management. And we obviously, this is something that we needed to be super strict on. But many companies, especially if you have had good fundraisings and now you need to preserve cash, I think, helping them or raising some flags, setting some controls.
Have good CFOs and controllers to implement that.
I think that's going to be key, because it's one of the most undervalued. I mean, most of the companies run out of cash, right? So, but still, companies that have fundraised constantly and very easily, I think, will probably need to develop this skill.
What about you, Rai?
I think it's a combination of helping navigating this complex time by maybe if one of your priorities is fundraising, introduce you to investors that are aligned to your vision. I don't think it's the right time only to get any type of investors, because then you use a marriage, and you marry someone that maybe is going for the downtime. It's when you met someone in the downtime. It's maybe not the best kind to marriage, right? And I think it's all about getting some experience or an operating experience. In our case, we have operating experience in our investors. Not only the venture capital that we have, very happy, but we have serial entrepreneurs that they are billionaire entrepreneurs, that they build massive companies, and they are part of our advisory board, and they're helping us to do two things: helping to continue our growth, because we have very ambitious growth, helping to scale the company, and helping to navigate those very complex times, which is serenity. Serenity in everything you do. You need to look at your cash flow. Well, look at your cash flow, make a decision making. Don't wait for 2 weeks. Don't wait for 2 weeks, because it's not going to change, right? So decisions need to be made on the spot. The only thing that we have as entrepreneurs is the speed and agility to make decision making fast, right? And you look for an investor is a sounding guidance, assistance to make some decisions. And that's probably what I think is the more helpful from our side, combining to open networks from other entrepreneurs and so on and so forth. In our case, we've been very fortunate, because we already raised also money in the last 2 months from serial entrepreneurs and institutional investors, help us to step in a good shape to fundraise, which is hard to do it when you don't have runway. That's the reality. If you don't have runway, then you take all the money that is going in.
Take the money when you can. That's definitely.
That's it.
We have less than 2 minutes, but if anyone has a question, maybe, don't be shy. Great.
Right now, investors are yeah, thanks. Maybe this is better. So
much better.
You spoke earlier on about growth, but efficient or healthy growth. Do you think investors are going to value this during the next 6 months or next year, or how do you see that trend going forward?
I think this is something that it's going to take long. It's not a seasonal thing or temporary thing. I think for the past at least 2 years, we've seen growth is higher than sustainable or EBITDA positive, however you want to call it, like healthy growth. But I think growth is obviously still important, but being having good financials, I think it's something that is going to be equally important, and I don't think it's going to be a period of 3-6 months. I mean, I think I can't tell you for what time, but I think we're going to see it for a long time. I don't know. I mean, I would be interested to see your perspective as an investor, but the feedback that we are getting is that this is relevant and it's going to continue being relevant.
Yeah, just 1 second. Now, from our perspective, and again, we don't know more than anybody, but we also see that it's not going to be the V is not going to it's going to be slower, so it's going to be here to stay for a while, and nobody knows when. But at the same time, I would tell you to end on a positive note that there's a lot of dry powder, there's a lot of money. We are investing. We're looking for good companies. It's a question of valuation in a way, as Rai was saying. Maybe you need to readjust your mindset. And in the end, it doesn't really matter how your company is valued today. It's important that you can continue to have a business to execute, and then future will, time will tell how much your company will be valued. But it's really on paper, it doesn't really count. So,
Yes.
and I think we have to
Thank
wrap it
you
up.
very
Thank
much.
you.
I am very sorry, but our time.